I backtested the liquidity sweep inverse fair value gap strategy over 2 years of data to show how unprofitable that system is. But after posting a video about it, I got an interesting message. Peter, what if you took the opposite of every setup from that strategy? So that a minus 45% return would now be plus 45% return. I got this message on about Wednesday and I've been thinking about it ever since. It's Monday right now, so about 5 days later. And at first, I was skeptical. This doesn't really work like that in the real world because the win is so small. You go from having a 2R, RR, and now you're only at 0.5. So you'll have really small wins and really big losses. So at first, but then I got convinced. So I thought, why don't I just backtest it over that same 2-year data span and see what the results get? So first, let me walk you through where we started. If you haven't seen the video, these are the RR results. Okay, this is a big table, I know, don't get overwhelmed. The main one you really want to focus on is this 3.5 row. As you see, I put it down here so you really don't get confused. But what this table is showing is just putting your stop at that swing low on the 1 minute time frame and then multiplying it by 1.52 to get your target, right? I'll have pictures in a second, don't worry. And so none of these really did good. You almost get break even, and then you go down the list, it gets worse and a little bit better. But this minus 44 is what started that message. What if you could turn this minus 44 to be up 44? Shout out Moya. I wanted to message them back, but they left my Discord, so I can't message them anymore. But Moya, if you see this, shout out for the message. So this win rate will flip from 13.8% to 87% about. So a really high win rate, but you'll go from a 3.5 RR to like a 0.3 RR. Something really low. So that's why I was skeptical at first. And yeah, let me show you what happened. Let's go. This is some quick numbers I crunched just to see, am I going to waste my time? Because I didn't want to get into coding it right away. I thought, let me just do some rough numbers. You see this first row here is that 3.5 RR we're looking for, the same amount of wins and losses you saw on that previous picture. And then just a rough calculation, assuming you stay at a 100K account and such. The formula I use is up here if you want to pause and look into it some more, but you lose about $300,000 with these numbers. Win percent 14% and RR 3.5. Okay, that's all it's calculating. Risk 1% per trade. Now, if we flip that, right? So win percent, complete opposite, 86%. But now the RR is also the complete opposite. 1 over 3.5 is 0.28-ish. And you'll gain some money. You'll gain about 83,000. Completely ideal situation, right? The amount of trades and wins here with this win percentage would give you this P&L, okay? So this is not taken into account compounding your account, right? So if you're at a 100K account and if you go down to 80K, it's risking the same percent with this simple formula, right? So that's why I had to go code it and get some more detailed results to see every trade that it would be taking in the reverse position of the original liquidity sweep inverse fair value gap setup. So quick note here, the actual P&L that you saw in the previous one, right? This is actual backtesting over 2 years of data. We have that minus 44,000, right? And this is minus 300,000. So this formula is pretty off. Not going to spend too much time on it, but the image down here is what we're talking about, right? So the one on the left is the original setup. Liquidity sweep is that yellow line. We get the inverse fair value gap and we take longs, right? Expecting a reversal. But now Moya, after messaging me, said, hey, just flip it. So now we're taking shorts, targeting the swing low instead of putting the stop at the swing low. And now our stop is 3.5x above, which is a crazy stop. I don't think that's, anyway, maybe some people make money trading like that, but I highly doubt it, right? It's not very realistic because when you do take a loss at that amount, it's going to make a dent in your account. Obviously, ideally, you only want to risk 1%, right? This is a massive stop, 1%. So your gain is going to be much less than 1%. But the quick formula says there is a possibility, right? So I went in, I coded it. over the last 2 years, like I said. And these are the results, okay? There was 2 situations here, right? This first row you'll see is when you risk 3.5%, okay? So that's like taking the exact same risk as the original setup. Let's go back to the picture. So on the left here, the stop loss would be 1%, right? If you're trading it normally. And then the gain would be 3.5% because you risked 1% multiplied by 3.5R, you're up there. So now if we reverse that with the same amount of contract size, now on the right here, your win is 1% and your loss is going to be 3.5%. So that was the first situation I simulated or back tested over the last 2 years. And you're basically break even. I mean, you end up at 101,000 off a $100,000 account, risking 3.5% per trade. And this is the chart on the left here. So you're bouncing up and down. You have a steady decline down for the first year. And then you're bouncing back and forth, and you get a steady decline up. You do pretty good at the end of last year or at the end of the second year, but you eventually come back down with those massive losses. So I thought this is pretty unrealistic, right? Nobody wants to risk 3.5% on a trade, even if you have a 68% win rate. So this chart on the right is the second row. Okay, now we're risking 1% per trade. So what does that look like on the image? That means this big red stop loss you have is 1% of your account balance. And then the green, the take profit that you're doing down here at the swing low is going to be 1% over 3.5. So about 0.2, 0.3%, right? That's what you're working with. And this is what happens. You stay, I mean, your account is barely moving, but it's the same idea. You're trending down for a full year, and then you start trending up for the second year. Maybe you'll end the year positive, but you're not looking too hot, okay? You are not looking too good. Maybe this could be fine-tuned a little bit, right? You have a high win rate. I think you shouldn't go as crazy as 3.5R. Maybe you could play with some variables to get it profitable, but I mean, this looks a lot better than the original liquidity sweep inverse fair value gap setups, right? I could work with this, maybe add some variables and turn it profitable. So that's it. I just wanted to hop on here and talk about this real quick. Thank you for watching.